up, YouTube? Listen, family, we back at it. If you guys are ready to get to the money, let me know down in the comments below. Listen, we had a day in the market today that's going to set up some great buying opportunities to end out the week and into next week, and I can't wait to dive into it. Listen, as always, please make sure you like, subscribe, help this video get at least 1,000 likes. And without further ado, let's go ahead and dive into it. Okay, guys, listen, we had a day in the market in terms of the sell-off. This was what I call a post sell-off in terms of the Fed rate cut yesterday. So it went over however it went over yesterday, and by all accounts, guys, the market didn't like what it heard, and so we got a delayed reaction. Okay, but really quickly, I got Apple pulled up here. We're gonna talk about that in just a second. Got a couple things on the docket for today. Apple had earnings. This is a great example of it went down and crashed after earnings and got bought all the way back up and went up $12. It's currently sitting at $271 on the day. And so listen, man, I want you guys to have certain things on your radar. Real quick, look at the S&P, the NASDAQ, and the Dow. Okay, guys, check it out. The Dow is down 109 points today to 47,500. The NASDAQ was down 377 points today, down to 23,500. Okay, and the S&P 500 was down nearly 70 points on the day, or 6,800. We are at, listen guys, we're going to close the year in the S&P 500 at 7,000, potentially higher. So all that simply means is any red day, and you already know when it's blood in the streets, it's time to eat. You are to back the Brinks truck up. Matter of fact, we're going to talk about that today, and you buy the dip. Okay, the market is going higher. These pullbacks are needed for us to get in position. Okay, back to Apple real quick, guys. They had earnings today after hours, and they went absolutely crazy. And one of the sleepers that I would say, I saw this lingering down in the low 170s until it finally woke up. They still get a lot of flack for not having a heavier hand in the AI play, but nevertheless, they're moving and shaking. Another one, guys, I want us to be paying attention to is Amazon. They went up.
All right, guys, let's jump into a little breakdown. I think this company is interesting. Sort of a Silicon Valley company. UiPath. Not Palantir. Path. This is the IPO. IPO price is definitely higher, but that tends to happen. April of 2021. Okay. It's approaching that IPO price. Do have integrations with NVIDIA and Snowflake. And how did earnings go? Well, it's up 80% since September. And then pulled back. Well, we don't have to measure that. That's 5 out of 20. That's 25%. Okay. And as for what this company is all about, well, they do data mining, basically. Here we go. I can see comments over on YouTube, so you can drop in over there. Okie dokes. This one stock can change early buyers' lives. This isn't financial advice, but I would recommend buying as much as possible before November 15th. The ticker is PATH, Path, company's UiPath, and they IPO'd in April of 2021, which, if you saw the stock market at that time, that was euphoric. 2021 second half was not so great. 2022 was not good for sure. And since then, we've had a massive bull market. The stock is getting back near that IPO level, and it's down 25% in the past couple of weeks. So it may be a buying opportunity for that reason, given it's building a flag. Let's jump into the chart and a little bit about their integration with NVIDIA. Here we go. UiPath.
Sam Putnam. This is Sam Putnam. This is Sam Putnam.
So this is the company, UiPath. They're an end-to-end automation platform. They do robotic process automation. So basically, we're talking about a software company. And they're in the AI category of that. Of course, every software company wants to be in the AI space, but they really do deploy machine learning models across the enterprise. I should stop highlighting this. So yeah, they were founded in 2005. So this isn't some recent SPAC that Chamath threw together. And they do have some connections with big companies like NVIDIA in terms of integrations, as well as Snowflake, which is a massive software as a service company. We'll take a look at the revenue and some of those connections. But first, let's take a look at this chart and see why this is so interesting. So you see this 15 and change level going back to right here in late December of last year. You can see it did go up near 18 bucks, which if we look at a 5-year chart, that's basically getting up there in terms of the highest level it's reached since coming down from that IPO. So it's not near the IPO price. I misspoke. But it is at an important level once it gets to that 25 in terms of getting above into sort of blue skies, because all these people who sold here, they're not bag holding. They sold here or they sold down here. It's very unlikely a lot of people bought the stock at 40 and then have held for 4 years and then suddenly see the stock pop off. You know, if they're that disengaged with their portfolio, they're probably not going to suddenly notice that it pops up and sell and cause the stock to come down with that increased supply. I could be wrong, you know, but in general, that sort of is the psychology of buyers and sellers, supply and demand, that makes sense. About 6 months is a good rule of thumb. So if it's almost November, you know, May is pretty much where you would look for people who bought in May probably still hold. So everyone who bought has made money except for people who bought in the beginning of November. So there could be some resistance up here from these buyers selling. But if you look at the amount of buyers up there, there's definitely some, you know, on this day right here. But in terms of total volume, it's not a lot compared to, you know, this is over the course of the year. This is where all the volume is. You see this blue volume chart over on the right side. So volume is tapering off. That's excellent in terms of, you know, lack of selling pressure. And getting it sort of down here, down at 16 or less, is kind of nice because, again, you can buy it off of this peak here, which does matter. The psychology here is basically, let's assume these people do still hold a stock. Well, if they hold it here and it comes down to where they bought it from, and they don't sell, it means they still want the stock. And so there's going to be demand and it's going to go up. So that's why it actually makes sense to draw this line here. It's not just, astrology. It's actually buyers and sellers. And you can think about that. I've certainly thought about that. If I bought a stock and then, I was making money on it, finally it got above and then it started to come down to where I bought it from. If I still feel good about the stock, I'm going to hold it, right? Even as it comes back down to my cost basis, my average. So that's UiPath. Huge run after this earnings beat. And that coincided with September, which was a massive move in the market. So that sort of checks out. And then a pullback that held. There's bound to be a pullback. I mean, this move is crazy. But the fact that it held and then formed a higher low right now makes it pretty attractive. So as far as, how the company's doing, revenue's up a little year over year, nothing big. Annual recurring revenue, this is according to their website, is super high, up year over year, but it's over $1 billion, which is very few software as a service companies achieve that milestone. I have no idea why this revenue number is smaller than the annual recurring, but I mean, we're not going to jump into this accounting gymnastics they got going on here. So yeah, maybe I'm just not a growth equity software financial guy, but someone can explain that to me in the comments anyway. Net retention rate, dollar-based net retention rate is positive, and I think I know what that means. I think that means they're not churning customers as much as they're adding new customers, which is obviously pretty important for growth. So that kind of checks out with the growth being 6 to 12%, this being 8% more customers than they started with. So yeah, I think this is good. Guidance is cautious. Now, I don't know if that's just because software companies in general are cautious, or if they're actually coming out with some sort of said earlier guidance was used as conservative, which seems pretty similar to cautious. But it'd be great to have guidance be strong, of course, but they can't actually say guidance is strong. Eventually it's going to be like a boy who cries wolf scenario. So yeah, we'll see. I don't see anything here that is a super red flag. But yeah, it did say this cautious outlook led to a 15% drop in share price. So this is for next year. And we'll see. We'll see if there's any sort of reasoning for that. It doesn't immediately seem to me that there would be a reason to be cautious about this, given they have a diversity of sector clients. They're not in just one concentration of type of client or vertical, right? Banking, that's an awesome place for AI automation. I gotta stop clicking this, keep this open. Healthcare, identifying basically imaging, AI in imaging is obviating radiologists, right? Financial services, that pretty much sounds like banking to me, but maybe that's also like loan scoring to give people mortgages and, banking the unbanked. That's what the startups always say. And then government contracts would be great, sort of in the Palantir vein. They do data mining, which is just, another way to say they are with big data. They are able to store that data. They're able to analyze it. Basically, they're not a pretend AI flash in the pan company. All the AI companies that are getting extra ARR, annual recurring revenue this year, because, their bosses at all the big Fortune 500 say, hey, you got to spend some money on AI. We're going to get left behind. Who knows if that's reliable. So if they're actually doing this data mining stuff that's been around for a decade or more in the enterprise, then maybe they have some staying power. It's actually a good thing, in my opinion. So as far as connections, literally connections, NVIDIA is one integration they have. This is a banking application, fraud detection for sure, like PayPal had it. And they've also, looks like, got Snowflake. Yeah, Snowflake is this data mining data platform. They're like the name brand for that. As far as the connection with NVIDIA, I'm honestly kind of unsure as to how that exactly makes sense. I mean, obviously they need the GPUs, but yeah, I don't know if there's anything super special about NVIDIA. I guess NVIDIA has microservices. That's a super hot thing in developer circles. Basically, if you have like an AI environment and then, you have all these like packages and dependencies and stuff on AWS or Google Cloud or whatever, they need to be designed with, the GPUs in mind. So they're very optimized. And then, of course, regulated industries like banking and financial services take a ton of extra work to get those whatever service level agreements and, make sure you're not going to lose the customer's data or expose it. And I guess NVIDIA is very much becoming the enterprise leader for sort of security in that facet as well. So it's hard to say exactly how NVIDIA products are connected with UiPath, but if you think of products more than just their physical hardware, then I'm sure they have teams that are helping implement and use their hardware for all these enterprises. So yeah, I guess I get it. I'm not as familiar with NVIDIA's sort of consulting arm, which is basically what we're talking about. So that's the level, that's the company, and that's the idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to work with me, you can join for $25 and ask questions, get a little update on the best stocks in a community Discord. So try it out. This isn't financial advice, but I hope that helped you.
This is Sam Putnam.
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 All right. Let's see. Where are we at now? What is Chris saying? Got cooking here.
Absolutely crazy. And after hours sitting at 251 right now, up $28. This is one of my long-term plays alongside stuff like Google. Okay, and so I'm very happy to see this. Matter of fact, this has been a phenomenal year for just a lot of the growth stocks. But this is why you gotta buy the dips. You gotta be in position and you gotta be ready, okay? Meaning your dry powder is on deck, locked, loaded, and ready to deploy anytime the market pulls back, okay? Okay, so those are two right there that should definitely get your attention, okay? Now, right here, I gotta touch on this, okay? If nothing else, I want you guys in your bag. Have you guys ever heard this saying, a rising tide lifts all boats? What did Coach tell you? Meta will go to $1,000. Okay, after earnings, Meta crashed. The crash simply is a buy the dip opportunity. For Coach, it's the back the brink up opportunity. Okay, so let me show you why it's best to buy low. A rising tide lifts all boats. Because Apple went crazy, because Amazon went crazy. Look at this. The Meta is up $10 from the low of day simply because the positive earnings from Apple and Amazon. Listen to this, follow this so you can change your life. Meta will recapture 700 and Meta will end up going to 1,000. Mark these down, track these levels, and then remember to do the work in terms of buying a dip for me, okay? I wanted to put that on you guys as one of my 2 plays. And then the next one, you guys got some good news today. You need to be on the lookout for. Netflix is up huge after hours, sitting at $1,123. They up $34 in after hours. Okay, they are doing a 10-to-1 stock split. So I told you from the jump this play was 700. I told you it was going to 1,300. All of those levels has been hit. We knocked them out the park. Now it has pulled back. This is the rinse and repeat. This is the back to Brinks truck up opportunity again. And they're going to run up back to 1,300. And then the stock is going to split. Everybody write this down. Class is in session, okay? Then the stock is going to split, okay? And then the price will be back to 600 or 700 again, and they'll repeat this same process. The stock split, guys, doesn't mean anything in terms of you getting more shares or less. They are doing that simply so more investors can participate. That's what.
Oh, stock splits are so stupid. But I get it. It's nice to have the stock be a price that isn't like 4,000 or something. Let's talk about Coinbase. Okay. Here we go. Any questions, comments, top those in the YouTube. Otherwise, we will start talking about Coinbase here. This one stock can change early buyers' lives. This isn't financial advice, but buying a lot of this stock before November 15th could be a good move. The stock is Coin, C-O-I-N, Coinbase, and they are the gold standard of cryptocurrency exchange. They were the cryptocurrency exchange that's been in the US the whole time before this new administration got all crypto friendly. So now you can buy crypto through your broker. You don't necessarily need Coinbase for that, but they still have the brand that if you want certain coins or if you want to basically have some staking or some type of crypto related risk capital, maybe you still want to diversify away from just buying some Bitcoin or Ethereum ETF in your traditional broker. And a lot of people are doing that. So we'll talk about why Coinbase is still very relevant, talk about why the price level is at an important level right now, and talk about companies that they have partnerships with. Here we go.
This is Sam Putnam.
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 So this is some news from this year on Coinbase. They were basically trying to create some blockchain-based stocks, and they're sort of in the good graces of the government. They already were in the good graces of the Biden administration for the most part. There's some concerns of what do I need Coinbase for when I can buy Bitcoin through an ETF so easily now, and institutions are buying them through ETFs or through MicroStrategy, which is definitely not a good idea or wasn't a good idea for the past 6 months I mean, this thing has just gone down, down, down since July. And then if you look all the way back to November, it's even down from November. So how MicroStrategy works, right, is you buy the stock and then Michael Saylor goes and buys a Bitcoin with your money. So he's selling the stock to you to buy Bitcoin for his company. So, it begs the question, why not just buy Bitcoin? And sure, when Bitcoin really goes up, so this was whatever this was, September of 2024, okay? If we look at September of 2024, yeah, I mean, Bitcoin really shot up there, okay? So if you get a leveraged play on Bitcoin, Bitcoin doubles and MicroStrategy goes from 100 to 500. So that's like the crypto dream. That's, when you talk about millionaires, billionaires even being minted in crypto, it's from those periods. Now, of course, Bitcoin hasn't really, gone too crazy since then. We did have these couple breakouts and this reclaim really, and then a breakout in July of this year, which we can see on the chart here. But MicroStrategy has detached from Bitcoin. That's basically a way to call it. Bitcoin's down a little bit, MicroStrategy corrects. Why am I talking so much about MicroStrategy? Well, because if you're not going to feel comfortable investing in MicroStrategy, maybe Coinbase becomes a more attractive investment. Particularly as Bitcoin itself isn't that attractive because the chart doesn't look great, really. In the long run, it might be super attractive. And other brokers, allow you to buy ETFs that are crypto that track Bitcoin. And then there's stable coins like CRCL is the new IPO Circle stablecoin, which kind of are biting into Coinbase's pies in terms of this tokenized, blockchain stocks and crypto payments. I guess Square is, you're soon going to be able to accept Bitcoin with Square. So Square is, that's like in restaurants and stuff. That's super mainstream. So the whole, why do you need an exchange? I mean, I don't use Coinbase. If I want to buy Bitcoin, I'll just buy some IBIT, which is a Bitcoin ETF with my existing broker, right? And then these other platforms may have low fees that Coinbase, if Coinbase was, doing well based on its fees, then those fees are down. That's a problem for sure. But there's still a lot of people who actually want, a hands to mouth, whatever, full crypto experience. Coinbase is still the brand that I think of when I think of crypto. And we'll see what they end up doing, but they are basically the US exchange. There's no FTX US, So Binance, I mean, yes, CZ got pardoned, but that doesn't mean that you can just go start trading on Binance, as a US citizen. So we'll see what happens. But yeah, if you're looking to do anything besides just buy Bitcoin, then Coinbase still has definitely a place for that. And here are some reasons that it's still worthwhile. I mean, 200 cryptos is a lot. Cryptocurrencies, people say cryptos, so I'm just going to say that shorthand. They're definitely dominant, and yeah, maybe you want to hold the coin. I don't know exactly why you need to hold the coin. It trades over the weekend, so the ETFs don't trade over the weekend. That's definitely a plus for people who want to have that sort of safety valve. I personally don't want to trade on the weekend, invest and sell on the weekend, or do anything like that. But I get it. So yeah, it's basically the number of cryptocurrencies that they have. If there's a new exciting cryptocurrency, like Shiba Inu or whatever, you hear about, it got listed on Coinbase, and that's like its gold seal of approval. And Shiba Inu is not you can't trade that through your Interactive Brokers or through your Schwab or anything, right? Invest in that. So yeah, there's this big delay between a altcoin becoming interesting and then it actually being tradable. There are some, mainstream coins. XRP and Solana, which are right here on Thinkorswim, along with Ethereum and Bitcoin. So some of them make it, but the smaller ones in general aren't going to make it onto your Thinkorswim or whatever broker you use. So that's Coinbase. And then a little bit about basically what they're up to. They have a partnership with the League of Legends maker. They have a lot of partnerships. They have one with PayPal. They have one with this bank that's actually really well known. PNC Bank is a big bank. And then they have a partnership with JP Morgan for this sort of using your rewards points and using them to buy crypto, and even using credit cards to fund Coinbase accounts starting this fall, which sounds pretty crazy, like not a good idea. But the rewards points is a huge market. Like there are certain rewards programs. I don't know if Chase is the one. Maybe it is. Maybe Bank of America's is, that are more valuable than entire airlines. So that's a big deal. PNC Bank basically allowing, I don't know what banking services. I guess you could wire crypto through PNC. I don't know. And then PayPal, you can buy crypto through PayPal. It sounds like Google Cloud. They're basically just, you can pay for Google Cloud through Coinbase. It's kind of like a Plaid, or like a almost like a Zelle or a Venmo in terms of buying services through crypto. So again, I mentioned Square is allowing you to accept crypto. I don't buy services through crypto. Most people don't, but it's definitely a growth story. So anyway, that's basically the story for Coinbase right now. Jump into the chart right here. Do want to take a look at Robinhood and Mara and Riot. Those are the crypto miners that are sort of turning into AI data center plays. And, we'll see. We do want to make sure that there's enough crypto trading on Coinbase to sustain those fees. So we'll see how the revenue continues to come out. But right now, Q3 revenue was up 50% year over year. So fees are high. Stablecoin fees are there. I think people must be staking their crypto, and they must get fees through that as well. So basically, you get like an interest rate on your crypto. It's always eluded me, like as to how it works. It still seems kind of sketchy, but if it's on Coinbase, it's not sketchy, and that basically reputation that they have, they definitely have a strong edge, is sort of omnipresent. I don't think I'm alone in knowing that Coinbase is really reputable. They could get into crypto lending, Bitcoin-backed loans. We'll see. I'm still on the fence as far as the future of this company. But as far as an investing vehicle for a few months, which is what this channel is all about, it's definitely there. So this is the left side peak, and if they get 350 is a very clear psychological level on a 5-year chart going back to whatever this is, 2021. 350 is very much relevant. And if we look even further back, well, we can't look further back because in April 2021 they IPO'd. I guess a lot of companies must IPO. 2021 was everyone was raising money. So that's why all these companies IPO'd. Coinbase, whatever company I was just talking about a second ago, IPO'd. So yeah, I think this company is a good buy right now. I think 350 is the important level. And I can't say that Coinbase is going to be the best company a year from now or 2 years from now. MicroStrategy is certainly giving us a hint as to why you have to be careful investing in these crypto-related companies. But Coinbase looks really good right now. And this is the other company I was just talking about that IPO'd in April of 2021, UiPath, which sort of is a similar type opportunity of a stock that's been sort of euphoric, pulled back, and then now is offering another opportunity to get in off of a left side peak. So That's a very psychological level. Coinbase is the idea at 350. If you like these ideas, hit that like. If you want to see more, hit that subscribe. And if you want to work with me, head over to stockscommunity.com. We do have a guarantee where if you don't make $1,000 in your first 90 days, you get your money back. So see if that's for you. I'll see you in the next one.
This is Sam Putnam.
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 All right. Jump back into some Chris saying here.
What this move will essentially be, that's what I want you guys to look at it as. So if you want more shares, people always say, Coach, should I buy it now or should I buy after the 10-to-1 stock split? Guys, you can buy this now and then you can have more shares once the split happens, or you could simply wait for a lower price, maybe 600, 500 if you get lucky. 700 will be the max. Okay, 600, 700 will be the max, and then you know what I'm saying, you can just ride it back up. It's gonna do this. The market think they slick, guys, but they don't know coaches on they like white on rice. Okay, and because I see what they do, if it's split again, this will be no different than the first time it split or any other company split. Look at this right here. Netflix rises after hours on a 10-for-1 stock split. It rose 3% after hours on Thursday on the news that it's splitting the stock 10-to-1. The company said its board of directors authorized a 10-to-1 stock split, and the shares sending it up 3.1% to, just what I said, $1,123 shortly before 6 o'clock. The purpose of the stock split is to reset the market price, because I told you when this was 400, I told you it was going to 700. When it was 700, I said it's going to 1,000. It went to 1,300. Now it pulled back to 1,000. Now it's sitting at 1,100. But listen to what they said. They want people to be able to afford it so people can trade it, more people can get into it. They think a 10-to-1 stock split will make this cheaper. Listen to this though. Here's a key thing. How I want you, if you guys want to change your life, Coach, what play can I play? Anytime a stock split happens, the stock runs up into the date of the stock split. Look at this. Look at this last line, and we're going to get up out of here. The stock split will be effective at the market open on November 17th. Whenever this is announced, Nvidia split, Apple split, Tesla split. I've been around a long time. I've seen all of these companies split. They get up high in price and they split and they make the price back low again. One thing they have in common, in most cases, the stock will run. So say beginning November 1st, it might run all the way to November 16th. And then the split will happen and then you'll get that new price 10-to-1 stock split, okay? That is something, if you guys want to be strategic, you got to always want to check the sentiment of the market though to make sure you're playing it the right way. But nevertheless, guys, that's what you got on.
All right. That's a lot of talk about splits. I don't think you should be doing anything related to splits. Sometimes you buy a split. I don't even know, honestly. I don't have a strategy around stock splits, but if Chris Sane does, try it out. I don't know. He does say a lot of stuff that makes a lot of sense. That is for sure. Stock splits in particular, I don't know about that. All right, Roku is the idea here. They recently had earnings. You got any comments, questions, drop those in the chat. Otherwise, we'll get going here. Netflix, Disney, Trade Desk, Apple, Amazon. I don't know how close those really are to Roku. But all right. They did recently have earnings. The earnings were good. The reaction was good. Beat revenue estimates. JP Morgan raised their price target. I guess that's useful. I don't know. I always feel iffy about talking about raised price targets. Let's see. Roku, $1 billion of Q3 revenue. They're guided above consensus, and they're into ads. So yeah, that's a story. That all sounds good. They also sell their actual device. So let's jump into a little breakdown here. Yeah. Okay. There is one. Oh, had a little bit of a fake out there. Fake out. Here we go. There is one stock that will surprise everyone. They just had their Q3 earnings over $1 billion, raised guidance as well above consensus, and they're starting to do ads. The company is Roku, R-O-K-U. If you have Roku, you can tell I don't have Roku. You know what they do. But if you're like me and you don't have them, they're basically like Peacock. Like you can get Hulu and Netflix on, but it's a little box like an Apple TV. I don't have Roku. I've seen it. I've used it. It allows you to watch a bunch of different shows. I think you can watch Netflix on your Roku. Revenue's up. It's expanding out from just platform sales to ads as well, showing ads. You know, I assume when you scroll through and pick what show you're gonna pick. I don't know if they can show ads within the shows, or if that's then suddenly you're in a, you're paying for Netflix. So if you're on that Netflix plan where you see ads, then you see the Netflix ads. But the point is, the ad sales are up. The chart looks good. They just had earnings, which is good, as I said, and you can buy stocks after they have good earnings and after that level has been established. So you're buying them above that earnings level. Let's jump into the chart. Talk about some other earnings in Q3 and why this one is different and worth investing in. This isn't financial advice, but here we go.
This is Sam Putnam.
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 Okay, so as far as tickers that had earnings, well, I mean, the main ones are the Mag 7 this week. And you can see why buying before earnings, I know this is very basic to a lot of people. Like, why would you buy before earnings? You don't have the information, right? That's true. Microsoft went down. Meta went down. Maybe if you were really paying attention, you would have, made sort of the underdog bet on Amazon because people were talking about them cutting 30,000 jobs. And then they had that AWS outage last week. So there was this sort of bad sentiment around Amazon that has nothing to do with their actual earnings, right? So, if you're super advanced, then you don't need me to tell you not to buy before earnings. I think the super basic way to go about it is just don't buy before earnings. It's hard to predict Google's going to go up like that. And it's hard to predict. I mean, some of these reactions are confusing too. Like this Apple reaction, is that worth buying? No, it's at the same level as it was before earnings. So what you can do is on Roku, looking at this chart, we can see that it took a second, but now there's a level at around $105. where you can buy above that level. So right about here, as this chart loads, it allows you to play a risk level, take a small amount of risk, and not gamble on what earnings were. And here's the level, right? About 105. This actual close is up here because it's in the after hours, but generally you just look at where everyone's trading it, right? I do have the after hours because I like to see, if a stock is zooming all around. And if we look at LRN, like that's why I like to see after hours, because there are some stocks that had earnings where, not good at all. And just because, your chart doesn't show after hours doesn't mean that you aren't losing money. So there's the gap down if you just look at the daily chart. But, if you actually happen to be, noticing very quickly that this earnings is not going well, I mean, you probably don't get out here. That was probably impossible, but maybe you get out here instead of losing another $10 a share when the market opens, or $30 a share. I mean, this is like a horror story, LRN and FI, and why I talk so much about buying and selling and not holding into earnings. So here's Roku. As that chart loads again, I really hate these Thinkorswim Schwab charts. They just get so caught up. After Schwab acquired TD Ameritrade, the software just takes forever to load sometimes, but it's still the best charting software. There we go. That's the left side peak, and it's over that, and now it's sort of establishing a level here, it looks like right now. As far as the actual results and companies to compare it with, here's the results. Let's start there. So I don't think that Roku is going to be the next Netflix or the next Apple, even though it's in that category. There aren't really a lot of comparable, devices, because this is such a winner-take-all market. I mean, how many other devices do you want to? There's Apple TV, there's Roku. I don't have them, so I'm doing my best here. But this is the revenue, over $1 billion. Beat estimates on the earnings per share. Revenue pretty much matched. But the guidance was up above the consensus. So that's a big deal. And as far as, it took a second for the stocks to go up. We saw that. This doesn't really tell the story. You can see this wick all the way down. So people who trade earnings, I mean, you were scared when this thing went down from 100 to 85 and then bounced all the way up. But I assume that's not you. I wasn't trading that. So as far as what they're up to, this is what they're up to, ads. So they also have some content partnerships, it sounds like. And there's positive signs. They're not profitable yet, but they do have that sort of monopoly in that device that streams all your, holds all your streaming services. So that's a big deal. I don't think there's going to be a startup that's going to be, the new Roku. So, and then as far as platforms, it looks like they might be able to do some sort of partnership with maybe Windows or Apple. I don't know what the Windows partnership would be with Xbox maybe, and then focus more on their software. I think, that could be actually received well by investors, because it's well known that Apple, Windows and Apple are the behemoths. So if Roku can be the layer on top of that and do the licensing, I mean, that's a real pain, I'm sure. So if they can attack that, maybe that's a way of differentiation. It's hard to bet against Apple in the hardware space. So I can see how, if they can spread their wings a little, that would be nice to get them out under Apple's shadow. And yeah, maybe smart TV competition is competitive, but I don't love a Samsung smart TV or HG smart TV. I mean, those brands don't really do anything for me. Sony even, they sound old. So Roku definitely has that new sleek sound, that new sleek feel to it. And as long as they don't have some sort of big issue with privacy or, just being annoying with a bunch of ads, I can see why, customers still go for them. I do think Peacock is on Roku, and Peacock is basically your portal to like all of the latest sports and big events. So this is definitely a big deal. Roku, that is. So yeah, we'll see what happens. I don't know what regulation would be on Roku, but I suppose it's possible they become too powerful. I mean, iRobot, I don't know if you guys saw that. This is pretty gnarly. iRobot selling off here in just a few days. So this doesn't look like a big deal, but it's pretty much, 60% down from 5 to 3. This is the company that was supposed to get acquired by Amazon, and there was that antitrust sort of decision that they couldn't. So, could Roku suffer a similar fate? I guess it could, but it looks good right now. They do have connections to these big companies. Maybe there could be an acquisition. I guess they're working with Amazon Ads, and maybe Amazon Ads is the one delivering the ads. So maybe that's why they were able to get into the oh yeah, that's exactly what it is, Amazon's platform. That's why they were able to get that ad revenue so quickly, because Amazon's been developing that for years. Adobe is sort of the leader in creative, right? And then, of course, the smart TV. I mean, we've all seen this before. Of course, they have that integration. As far as more sort of adventurous ones, Instacart. This is sort of like a inside baseball one as far as measuring Instacart purchases. That seems like more like research. Maybe some type of partnership will come out of that, but I don't know why Roku would totally be the go-to for that one. I mean, TV ads driving e-commerce purchases via Instacart. I guess if Amazon doesn't want to partner with these companies and Roku becomes the partner instead, I guess that could be a reason that they have a competitive advantage. I don't get why. I guess you need this this physical box. So their box is everywhere, and Amazon didn't get there first. They were too busy. So should probably just accept that Roku succeeded. So you don't have to bet if they're going to succeed in the long run, though. That is the level, 105, and could they run to 120? Totally. I mean, of course, they did it in 2021, like all the other crazy tech companies. So they're over this peak here. This is an important level that they're pressing. Risk a couple bucks, make 10, 15. That's the name of the game. You don't have to be wedded to these companies. You just have to play the momentum and very high liquidity. So big opportunity. I think it's a good idea. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to work with me, head over to stockscommunity.com. You can talk about your portfolio. You can basically see the best idea on a given day rather than just seeing a random video fly by your YouTube. So if that sounds like it's good for you, if you're a busy person and you like the sound of that, try it out. See you in the next one.
This is Sam Putnam.
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 All right. Let's see what Christine is up to.
Horizon. These are just two examples of many I wanted to put on your radar for today. Listen, as always, great job. We make videos like this every day, so if you like this one, make sure you check out the next one. If you made money today, guys, let me know down in the comments below. As always, guys, we make videos like this. If you want to get some free stocks, make sure you check out the link below. I'll check you guys out in the next one, okay? But stay tuned, because we gonna cook. Everybody be in the Discord first thing in the morning. Everybody else consider joining the money team. Let's eat next week. I'll catch you guys in the next one. Peace.
FSLR is definitely interesting. And
Folks, you better
Charlie
get
here.
ready. In today's video, we're going to break down the latest on the market and plays. And then we're going to go on to one specific stock that I believe is the steal of a century. I think you would be a criminal to snap up this stock at current prices. This stock has a killer competitive business model, a lot of catalysts, an asymmetrical risk versus reward profile, and overall, of course, a great valuation. I'm going to make my case for this stock and I'll let you be the judge. As always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Also, quick plug, our Halloween sale on Discord membership starts now. Buy the dip if you dare. Discord members get access to all of our ideas and alerts, stock briefings, our daily morning briefings, our price forecasts, our model portfolios, our urgent news and catalyst AI bots, and our 10+ hour video lesson library, and much, much more. Use the link down below to get a spooky 25% off discount on our annual membership. Okay, so let's start with market context. So ever since November 30th, 2022, there's been a big disconnect between the stock market and US job openings. What happened on that date? Well, that's the day that ChatGPT was released. This marked the start of Wall Street waking up to the fact that the next growth opportunity for equities was actually in companies getting rid of jobs, not creating them. And ever since then, you've seen more and more companies get applauded for laying off workers and instead investing that money into AI infrastructure. And in past economic cycles, when you saw just fractions of the current investment that's being spread into AI, well, you would see massive job creation, but not this one. Why? If you give $10 million to a tech company, that company goes and puts that money into a data center and maybe hires 3 people. Those centers will eventually help the company fire their current staff in different departments. Whereas if you give a mom and pop traditional business that same $10 million, well, they may open a few more shops and hire dozens and dozens of people who then help the company to grow and hire more people down the road. So the trillions of dollars in investment in AI is creating some jobs today, but not nearly as much as previous economic booms.
this is true. This is definitely the main public policy problem with AI. Let's jump into a little breakdown of this solar stock, though. I don't know if it has any connection to any big companies, but we could ask. Let's see. BP, for sure. What do they do at BP? They're supplying solar. Oh yeah, because BP is becoming more of an energy than an oil company. Okay, well, that's a big deal. And then the revenue is, they beat in earnings and revenue, and that's Q2 though. When is Q3 earnings? Right now. Why don't you give me the Q3 earnings, dude? Okay. What is the size of that BP contract partnership? It's big, right? How big? 5 gigawatts. 5 gigawatts certainly sounds like a lot. All right. Just below $1 billion. Earnings per share increased. Profit improved. The reaction looks really good. They do have that partnership with BP as well. So let's do a little breakdown. If you have any comments, drop those on YouTube and then we'll get going. This one stock will surprise everyone. The ticker is FSOR for solar, and they have a partnership with BP. So BP contracted 5 gigawatts of solar panels from them. BP was the oil company, and now they're rebranding into the renewable energy fuels company of the future with the help of First Solar. First Solar had an awesome Q3 earnings, beat earnings per share. The guidance is a little murky, but the reaction looks awesome. So that's the buying opportunity. This isn't financial advice, but let's jump into the chart.
This is Sam Putnam.
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 All right, so here is the First Solar net sales, a little under $1 billion. This is the revised down guidance from the prior year. So despite all that, despite shipping fewer panels, they had to do a little bit of a warranty, $50 million, seems like a one-time deal. Yeah, they're profitable. So that's a big deal for sure. And if they're able to do all that, be profitable and still have that lower revenue, lower guidance, all that, and the guidance isn't impacting the earnings reaction. So that's what's interesting. So did it take a second? Yeah, it did. Sometimes you see these move up in the after hours, but a lot of buying. So people are definitely interested. And by people, I mean not retail. So you can sort of ride this wave. It's at an interesting level on a 5-year chart. We're getting up near these highs. So we'll see what happens. But once you reach above here, you're really looking at sort of all-time highs. This is from 2008. I mean, that was a long time ago. So solar's been a long time coming. This is a little difficult to get positioned in when a stock just marches up, but it also means that, the earnings are solid and there's buying activity that's someone is accumulating this stock. So you can't really, maybe you could say that this was like a flag opportunity somewhere in here, but it was a little weird because this earnings reaction didn't do anything. So this was less, not predictable. Maybe there's a flag opportunity here, but that's about it. You can't just buy, in my opinion, like just randomly in here and just expect it to keep going up. Whereas right now, you get a clear level that's closed here. So 267, you can buy a little above that, risk a few bucks, and then look for a move up to 300 whole dollar level would be totally awesome. Somewhere up in here. So that's the chart. And then as for what's going on first in the ETF, the TAN ETF is the solar ETF, has been looking great. Enphase, another solar company that not so hot, but Sunrun has been looking interesting. A little difficult to get positioned in this either. Maybe you can kind of see something shaping up, but earnings are coming up. You kind of have to wait for that unless you think this is going to shoot up. And it seems like this is definitely the best opportunity, First Solar right here. So yeah, it's a high volume. There's high volume. Close. There's the close, 266. Setup. That's the setup. Buy over that. So that's how that works. When it works, it doesn't always work, right? But it's a low risk opportunity. So you get more shots on goal with that. Now, as far as what actually happened, what they're actually up to, we were talking about what happened with their earnings. Here are the connections. Here's that contract with BP. It's a big deal. 5 gigawatts is a lot. I'd love to put that in dollar terms for you. I could, but essentially I would be guessing. And we know gigawatts is the same order of magnitude as we talk about power for data centers. It's on the order of gigawatts, not, megawatts or dozens or hundreds of megawatts. It's gigawatts. So this is the target, 25 gigawatts of solar by 2025. And that's the global target for BP. So First Solar, BP is huge. I mean, First Solar providing a fifth of that, 5 gigawatts, is a big deal. I'd love to tell you exactly how much does 5 gigawatts of solar panels cost, but I'm pretty sure, you know, it's probably in the hundreds of millions, considering their revenue is like 800 million. As far as other companies that this company is connected to, a rough estimate, let's see. We have residential solar panels at our house, but I feel like this is a whole different ballgame. $5 billion in capital cost. All right. Well, I don't know if we're gonna trust Dr. ChatGPT here, but it definitely seems like it's in the hundreds of millions at least, which is sensible given 20 gigawatts or something is you know, the AI data center requirement. So, all right. As far as First Solar connections to other companies, I mean, these revenue numbers are awesome. I don't know exactly if dilution matters for this company. I think it's just too big, which is good as well. You don't want to have to worry about. I mean, Sunrun has been on some crazy sort of moves. I mean, this is Sunoco. Sunrun, this is pretty ugly. This move down, it got cut in almost more than half. I mean, 20 to 10. And I'm not saying that, you know, this is better in that sense, but at least, you know, it's shaping up in a way where this is just sort of erratic. And it's a lower price stock too, and it's just more liquid. It's just $200 million a day. Still has earnings coming up. This is more like double that, $500 million a day. It's just important to get in the liquid one. And I mentioned that because so many times it's attractive to get in the lower price one because it seems like it's inexpensive, you know, and you're getting in and it'll have more of an opportunity upside, but it also has more dilution. See, First Solar doesn't even show up on this dilution tracker. No pun intended. This isn't about solar tracking. But if you look at some of these other companies in the solar space, I think you're probably going to see some, you know, they need to raise money. I guess Sunrun is just over $1 billion market cap. It's not in that category. Enphase maybe is out of that category as well. But you do have to be careful with these. This is $4 billion versus First Solar is up in, let's see, yeah, 20 billion, 100% institutional owned too. That's an important metric. If you can see that or remember to look at that. I'm not saying you have to actually dive into all of these filings that are just pulled from the public, you know, Edgar, you know, the public database of all filings. But it never hurts to sort of have some sort of tool that summarizes for you essentially how many institutions own this. If you're shorting a stock, you definitely do not want to short a stock that's 100% owned by institutions. So for us, buying a stock, you know, that's pretty attractive to see that. It feels safe. This institutional ownership is pretty high too. I don't know if that's the case for all of these. Let's see. Enphase. Yeah, a little lower here. So you can be a little bit less, you know, gung-ho buying a company with less than 100% institutional ownership. It's just one more little piece of data that can sometimes help. As far as other information about this company that you have to be careful about, we'll see if it's kind of the whole energy narrative, right? If solar becomes less attractive. So we got to get to nuclear to power all these data centers. We know that. that's going to take 5 to 10 years. So we need natural gas in the meantime, and then solar can fill that gap. And as long as, the big tech lords are excited about solar and wind, which they seem to be, but it's not a silver bullet, right? In the words of the Renewable Energy Lab when I worked there, that's what my boss would always say. It's like, you need all these sources because they're so intermittent. So the wind blows at night, the solar shines during the day. And then, you need natural gas because that's sort of, honestly, probably the best source until we get to nuclear. So that's the chart. That's a little bit about the company and little institutional ownership, sort of validation for why this is worth owning. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to chat in the Discord and get the best idea of the day, on the day, head over to stockscommunity.com. You can join that, try that out for $25.
This is Sam Putnam.
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 All right, guys, what else do we got cooking here? That was First Solar. FTI and NTRA are the other two that I think are super interesting. So, see what else Chris Sane has to say here. Oh, no, we're talking about Charlie.
And over the very, very long term, this investment will lead to widespread replacement. Over the next 5 to 10 years, the vast majority of new
I don't know
job
if you guys
creation
have
is going to be
experienced
way,
this,
way
but
less than has
Windows
been in previous
indexing
economic
takes
cycles.
forever.
And then long term,
Like, I'm
once
just trying to
AI gets
search, it
very
takes
good,
forever.
you're going to see massive job losses.
incredible.
And this is the calculus that investors and markets overall have started making since November 30th, 2022. At that point, investors started deciding to position very, very heavily into companies that are replacing offices with data centers and people with data software. And they've positioned correctly. Financial Times data shows that 80% of 2025 gains in U.S. stocks have come from AI
Maybe this
companies,
doesn't need to
and
be this loud,
40%
too.
of U.S. GDP growth in 2025 has come from AI companies. And I actually think when the numbers are done for the entire year, it's going to be substantially higher than this. Now, at the same time as this, cash is crashing. The people who actually do have jobs in this economy, well, the cash that they're earning, the value is going down. And the cash that they're saving, the value is going down. The trash USD, when compared to the also trash euro, is down 12.5% year to date. Central banks around the world are dumping USD onto the market, causing an influx of more dollars into the market, which will then make this trend way worse long term. The US government is also continuing to print at an extraordinary pace, and the Fed is returning to unleashing unprecedented levels of liquidity and easy money and incentivizing the massive increase in liquidity, incentivizing trillions and trillions of dollars in reserves that are parked in treasury bills and bonds to re-enter the market and broader economy. And what's this going to do? It's going to cause the US dollar to crash even further. Long term, the everyday person's going to get screwed out of their job, and long term, the everyday person's going to be screwed out of their dollar value. So what does this all mean in effect? Well, let me put it to you this way. There are two major trends that are happening right now. Number one, the AI arms race is taking over the economy, will eventually cause massive job losses. And number two, the USD is rapidly eroding, will eventually kill savings of everyday folks. Now, what will happen long term? What does this mean long term? Well, shareholders and other smart asset holders will get the majority of the gains, and regular folks without assets will see further buying power erosion. Their savings will erode, they will lose their jobs, and eventually, hopefully, they get bailed out by government through UBI payments. AI and the crash of the US dollar are two separate things that alone would completely disenfranchise the average person in this economy. But we actually have both, and that's why I'm so fired up to come on here and tell you that you need to be allocating into smart assets. You need to be somebody that's going to benefit from this trend, not be destroyed by it. Most people might not have the interest or might not have the extra cash to even protect themselves from this. But if you're watching this, I'm assuming that you got at least a few bucks to start allocating and thinking very, very critically about the long term here, because this trend is going to cause insane growth opportunities for folks that know about it and insane destruction for folks that don't. That's why we're working so hard to bring you ideas here and in the Discord. Okay, speaking of ideas, let's get to work. So we're going to go ahead and start with AMD. So back on April 14th of this year, we made a video saying, look.
Okay, AMD is up. That's true right now. Let's jump into what this company does. FTAI. They do like engine leasing, repair, but I don't really get. So they're purchasing Lockheed Martin's, one of their businesses, for a couple $100 million. And then as far as their revenue, Why do we not have Q3 revenue? Like, why would you not? Q3 earnings. Obviously, that's what we want, right? What is going on? Oh my God. Kind of a rocky sort of reaction there, but it does seem like that's already happened, bro. The earnings have already happened. Q3 2025 earnings already happened. FTI. What were they? Come on. Let's get this out of the way here. Oh my God, dude. Jesus, it's horrible. Alright, we're gonna have to do this the old-fashioned way. Let's look at this. Look at the news. Revenue was up from 450 to 670 million. Raised its dividend. Revenue was up, raised its dividend, and it was a earnings slight miss. Okay. But it's at an important level, 170, going back to December of last year. Right about somewhere in here. All right. Here goes. Revenue. There is one stock that is about to skyrocket. This is an engine leasing company. The ticker is FTAI. And they recently purchased for a couple $100 million a division of Lockheed Martin. So this is one of the big dogs. Their revenue for Q3 was up in the mid 600 millions, up from 450 million year over year. The earnings was a slight miss, and the earnings reaction is a little muddy, but they're at an important psychological level from 2024. So let's jump into why this is a good buying opportunity and what is an engine leasing company.
This is Sam Putnam.
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 So this is the chart, and you can see this earnings reaction has been a little muddy, right? Sort of sold off, came back, sold off. What's interesting though, typically, this would be kind of cause for, disinterest. If you look at the trade desk in Q2 earnings, some of these earnings reactions have been scary when the company sells off. I'm definitely gonna drive a spike through Thinkorswim's head if this software ever, All right, sorry about that. Just had a little outburst there. Here is the sell-off in Q2. So this is what you have to be, and Trade Desk did it again. This company is just brutal. So Microsoft is an example of a sort of a recent example of, it's kind of a sell-off, but it also is coming down to a key level. So it's a little different, somewhere in here. It's a little different than a sell-off like Netflix had this year, where it just sold off and went below a key level. It's a little different than a Tesla earnings this year, where it sold off and then bounced right back. And then, there was profit taking, and, we are forming higher lows. So it's all good. This is doing what Tesla needed to do, but not in the cleanest way. So you're not getting a clean earnings jump in where you can get and risk off a prior level, which is something I think is doable in Roku when this darned thing loads. $105 you'll see is sort of the level here where you can buy above that. This 107 is actually from overnight trading, after hours trading. So somewhere in here, once there's an earnings candle up, 5, 4, 3, 2, there it is. Okay, once there's an earnings candle up, then you can buy, risk a few dollars, and then take a ride up to 120 or so. Or if there's some profit taking or it sells off, you just get out. You know, there's an important level right here, 105, where you just get out. So it's no harm, no foul. So FTAI, why is this level important? Well, on a 5-year chart, or maybe even a 3-year chart would be sort of more visible what we're talking about here. Right here, okay, $170 just about, 175 maybe. This is the level that it held here, and now it's coming back to that level as well. So it's kind of like an undercut, you know, sell off where you're getting another chance to buy. And that's super important because all these people, you know, if they bought up here, maybe they sold down here. I'm sure they did. But if some of them, if they come back up here, if they're buying here or if they're still holding their stock, it means there's continued demand here. So the company's worth more than they thought it was worth back here. So they still like the stock, you know. So that is a vote of confidence. And that's why we can feel somewhat safer buying on what is traditionally, you know, you don't necessarily always want to buy an earnings reaction that sort of looks like mucky like this. So that's the price level, the idea there. And as far as what they're basically up to, they do like asset leasing and you know, jet engines. So, you know, I guess they also do some sort of course they have to have great financing. I mean, the couple $100 million from Lockheed Martin, and then they also partnerships with LATAM, which is a well-known big airline, on the scale of I think like Alaska Airlines. So they do engines. So they basically do sales and leases. So I'm not sure they actually build the engines. I think they're like a bank for you know, kind of like how a fractional aircraft company doesn't own the planes, they like sell the space, I think. Or even an airline doesn't own the planes. Maybe they lease them and maybe they buy some of them, but I don't know. I'm not an airline guy. I'm just trying to figure this out in front of you guys. So FTAI, this is what they do. They purchase for a couple $100 million Lockheed Martin's piece of their business. Obviously the chart looks good, but we need to figure out, okay, is there some wings here, right? Is this still worth it? And they do have the highest operating margin among peer companies. That's a lot, 30% for basically a manufacturing company. These are the other sort of tickers to take a look at: AER, AL, and GATX. So AER, AL. AER had a good earnings reaction. AL, I don't know what happened here, some type of acquisition situation. And then GATX, that's not a good earnings reaction. So mixed bag. Okay, so we do, in my opinion, if this thing holds, that would be one, maybe not a huge factor, but a factor in FTAI holding as well, or at least coming up back over that earnings level. The miss was not much. I mean, you can see it was estimated $1.20 and the actual was $1.10. So not a big deal in terms of, not that the earnings reaction is solely dependent or even, you know, always directly dependent on the earnings per share, the miss or not, but it's good to take an eye on it, keep an eye on it. Improved guidance is a very strong sign. And then it seems like, you know, airplanes are not going anywhere. You still need to maintain them. Airplanes, I'm pretty sure they get sold from like decades ago. You know, you might be flying an airplane that was built in the early 2000s, like a very common commercial airplane. And then as far as, this is Q2, this is last year, as far as what they're actually up to otherwise, I don't know if there's going to be any major market headwinds for airlines. I mean, yeah, for sure, you can just look at the actual airlines. I mean, duh. I don't know why I didn't think of this before. But UAL, DAL, Delta, and American Airlines. So kind of mixed. That's a good reaction. I want United to load as well. It's just going to take a second. So if not so great. So if airlines tend to kind of move together, you can sort of zoom out, and I mean this just follows the market for the most part. But Delta, yeah, same sort of pattern, right? American Airlines maybe a little more severe. But if we can just, generally see these things marching up at least somewhat in step with the market. This is actually a lot. I mean, this is from 10 to 15. This is a small price stock. Doesn't look like it on the chart, but if they can keep marching up, in general, that's, a good sign for FTAI. And I don't know that they have any concentration risk on any of these particular airlines. I think you probably want to weight the bigger airlines a little bit more, United Airlines over American Airlines, which is that $10 price level. The other thing I'm doing is I'm filming videos while Thinkorswim does maintenance over the weekend because they don't want to do maintenance on their program. There it is. So yeah, as long as it keeps marching up in general, I think that's relatively bullish for FTAI, even though, it's over the past couple weeks, months, these airlines don't look great. So maybe it'll level off here. Maybe it'll go sideways for a bit. But I do think there is an opportunity here for if some buying comes in. I mean, there's always a lot of volume around earnings. This could be a skyrocket opportunity over this initial earnings candle because there's a lot of eyes on this. There's a lot of liquidity. And as long as it doesn't sell off, I mean, these things can reverse. And I'm not saying it's going to be as crazy as, for example, an IBM reversal. I mean, that was on the second day. So, I mean, this is crazy. 260 to 310 in 2 days, 15% on IBM, which moves 5% a day. So, massive move there. I'm not saying FTI is going to do that. I'm just saying sort of the ingredients are there for that possibility to happen, given this left side beat going back to late November. So that's the idea. Those are the levels. That's a little bit about what other tickers to look at, airlines basically, and then AER as well, this earnings reaction, and see if that one holds. If you like these ideas, hit that like button. If you want to see more, hit that subscribe. And if you want to join the Discord, head over there. You can try it out for $25 for 7 days. I'll see you in the next one.
This is Sam Putnam.
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 All right. What else have we got cooking here?
Look, AMD is an obvious buy. It's one that should be bought nonstop, and it's one of the most overlooked stocks out there. It's the runner-up to NVIDIA and is getting a lot of the insane overflowing demand because their lead times are way, way better. And at the time, it was trading at the $95 region. And if you look at it today, it just hit $264 at highs. It's heading closer and closer to a 3X, which is beautiful. Now, a lot of times, folks, we're going to make a call out on a stock, and maybe it goes up immediately, or maybe it doesn't, and maybe it even goes down. And a lot of folks will judge the success of the call out based on whether it immediately does well, which is the worst way to judge a call out. The minute that the stock has one red candle, people jump ship and they're like, oh, this must be a scam stock.
Successful.
And they go and they chase some other new shiny stock, which then that one too starts selling off and they have to chase again a different stock. If you're somebody who consistently loses money in a bull market, it's probably because you have shiny stock syndrome. Always trying to chase the next runner without ever trying to think, okay, well, what's the bigger picture? Now, the reason I'm saying all of this is because AMD is a stock that many folks considered a failure because it didn't go up right away. It didn't perform immediately like people wanted. However, long term, and it wasn't even that long term, well, the value became obvious to markets. So anyways, what's the trajectory moving forward? Well, if you're in the Discord, you know that we see AMD as a $958 stock by 2030, which puts this stock at about $1.54 trillion in market cap, quite the jump from today's market cap at $422 billion. We've also alerted calls on this multiple times over the last couple of years, and I highly recommend you take a look at those calls in the Discord. In terms of further calls, I suspect we're going to be making more call option alerts on this, specifically stretching out the next couple of years because we do see a decent amount of valuation to fill in. Okay, next we got to talk about NVIDIA. So NVIDIA this morning became the first $5 trillion company. And there's a saying in markets that say you got to always follow the money, but a lot of people that have been calling NVIDIA an overhyped hype bubble simply haven't followed the money. Now, back on August 23rd, 2023, when NVIDIA was trading at around 1/5 the current valuation, we made a video explaining that yes, NVIDIA is going up, but it has way, way, way more to go by sheer nature, that the earnings are climbing at the same, if not at a greater pace than the price. What you're actually paying for, the earnings, the actual earnings that you're getting per share, well, that's actually a much better way to gauge if something's overvalued or not. And this is something that we've been saying for years with NVIDIA. You can look at all of our public videos, and those predictions have now aged like fine wine. That said, don't expect the same extreme growth rates that we've seen the last couple of years to happen over the next couple of years. Expect more maturing and more steadying out, but still nice outperformance growth when comping to the overall market. If you look at our Discord price forecast, by 2030, we see NVIDIA hitting $339 a share. That's still a lot of upside, but it's nowhere near the risk reward profile that we had back in 2023 and before that. On top of that, you got to keep in mind that the PE ratio today is trading within normal range for NVIDIA. So if you use the same metrics we used to judge NVIDIA back in 2023, well, in 2025 at current prices at all-time highs, NVIDIA still looks like a buy. That said, why do I think the growth rates are going to drop? Well, because long term, I think what you're ultimately going to see is the scarcity that NVIDIA is enjoying right now that allows them to charge whatever they want. Well, that's going to steady out a lot, and chip costs long term are going to fall. That's just simply how new technologies go, which means long-term growth rates are going to mature out a lot, and you're going to see NVIDIA still be the top dog, but chips are going to become more of a regular commodity versus something that nobody can get their hands on. Okay, next, Palantir. So Palantir officially hit highs at 198 this morning, heading for a rush into the 200s for the first time ever. And this comes as NVIDIA CEO just said that Palantir probably has the single most important enterprise stack in the world. Now, context here, Palantir is perhaps our most famous pick of all time. And the reason that this is a famous pick of ours is because when the stock was down 72%, it had just hit $7.28. Well, I made a very contrarian video on it, and I said, yes, it's down huge, but this is actually an insane opportunity. It's not something to fear, it's an opportunity. I presented the facts, not the fear, and this was back in 2022, and I continue to do so for many years. And by the way, I understand that now everybody thinks Palantir is great, but if you weren't around back then, you don't understand. Back then, everybody said Palantir was going to zero. It's a garbage meme stock. I know it.
Okay. Charlie called Palantir. Okay, we get it. I'm just messing around. This guy is persuasive and smart. If you have any comments, go ahead and drop those in the YouTube chat. And let's talk about Nucor. Partnership with a nuclear company. Lower guidance for Q4, but they did beat earnings in Q3. And there's another steel company, STLD, which has been doing well. If I'm not mistaken, if we can load our charts here, STLD, Bueller, please Thinkorswim, Schwab, Ameritrade, whatever you are, show us the company. Why does it take 30 seconds to load? Thank God we're not day traders. Oh my God. 5, 4. There it is. So, pretty big earnings move. There. Okay. That's Steel Dynamics, right? STLD, Steel Dynamics. Okay. There is one stock that is about to skyrocket. The company is Nucor, NUE. They are a steel producer, and they have a big partnership with the nuclear company. So they're actually helping manufacture nuclear power plants, which are going to be a massive growth opportunity for the GDP of the US in the next 5 years, for AI to happen. This company, NUE, beat on earnings, and guidance is a little low for Q4. However, the chart is still set up very favorably to buy right now. It can hold for a month, right? I mean, Q4 is not for a while for those results to actually come out. And if we look at its peer, Steel Dynamics, ticker symbol STLD, it also had a pretty positive earnings reaction. So I think NUE looks good. Let's jump into a little breakdown. This is not financial advice.
This is Sam Putnam.
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 So this is a little info about the company. NUE, Nucor, is the company. They do have some connections that we want to talk about. This is the partnership I'm talking about with the nuclear company. They're evaluating the use of this steel and infrastructure for gigawatt scale nuclear reactors in the US. Okay. Gigawatt scale is the same scale. I was just talking about FSLR delivering 5 gigawatts of solar power to BP Energy. We need like 20 gigawatts for data centers. So solar is going to be part of it. Nuclear is going to be part of it, like Oklo or SMR and NNE or the other ones. But Oklo is the main guy. Still holding up there. These speculative names are holding up. They're not supposed to hold up. We'll see what these earnings bring. Past earnings reactions for this nuclear company have been, solid, if not sideways. So if this holds up, side note, I think these quantum names might have a prayer as well, but probably not. These are probably done. The rare earth names are probably done in the way that United States, whatever this is, USA rare earth. USA rare earth, sort of just totally died. But Trump and G also had a little bit of a, coming together. So we're not so worried about rare earths. Back to the ticker at hand, NUE. This is the earnings reaction. It's super solid, beat on earnings. We can see that beat right here. And then if we look at its peer company, Steel Dynamics, STLD, also sort of taking off. And the most recent earnings was a beat. So super moves here. The nuclear company is, I don't believe, public, but this is recent as of late September. They're evaluating that steel. So that's super interesting as, a 5-year plan for this company. If we look at a 5-year chart in the past, we're done all right. We definitely returning to 2022 levels. I mean, interestingly, steel and I guess oil actually in 2022 also went up quite a lot when pretty much every other company did not. This company has been stratospheric since early 2021. But as far as levels to look at, there's a ways to go. I mean, this is all the way back in 2024. So really, this is kind of like a month to 3 month sort of idea. It's sort of buy in here, off of this sort of chop back here. There's a bunch of people that bought and sold back here, right? And so now the question becomes, when you get to this pivot level, is it going to be a pivot where we go up, or is it going to be a pivot where we're like, no, it's not worth that much, and it sort of rolls over? So that's sort of why this is important as a level. And then you can't buy like the initial earnings day because that already happened, but also because you can see it closed up here and then it basically gave some back. So it's actually below that level of about 152, which if you look at here, somewhere in here, it's below that. So if it gets above that, that's a super clear level to risk right here. But in the meantime, 150 is also a really psychological level that it has sort of respected to some extent, going back to here, 150 right in here. So, sort of apples and oranges or whatever shades of gray as to where you want to buy in here. But big picture, we're talking about a move from 150-ish up to, 170, get above this high here, and then, maybe shoot for 200, but not in the near term. This stock moves 6% a day. 200 is a full 2 years, year and a half, 9 months away. So yeah, this is more like a tight risk reward, risk a few bucks, make 10 play, or make 15. So that's the chart. And as far as what else they're up to, this is the partnership. And this is what I was talking about. So that they did beat the earnings per share, but caution about price pressures, and steel is a little cyclical, I guess. I mean, that's if you look at the chart, I mean, these companies definitely look cyclical in nature, literally up and down. So I guess you have to be aware of that, and that's why maybe you just buy for a month or so. Case studies with big manufacturing clients, I'm sure. I mean, if they're such a big company and they're not even doing anything related to nuclear yet, they're a major recycler of scrap steel. So they're in a bunch of different verticals: construction, manufacturing, and infrastructure. I'm not sure. I guess you need steel for bridges and roads and maybe even guardrails and all that. I mean, I'm sure you need steel pretty much everywhere. So this seems to be the company, and they sell a lot of it, $600 million a year, or no, yeah, is that right? A quarter. Yeah. Net sales are 8 billion. EBITDA is 1 billion. A year ago, for that quarter, net earnings were 250 million. So yeah, I mean, just a little double check on the scale of this company. Generally, a $30 billion company, this is sort of in the same, First Solar is 25 billion, right? That I was just talking about. Institutional ownership, a little lower than, would be ideal. They do have operating facilities in Canada as well as Mexico. So a little more diversification there, and of course not China or anything that could be worrisome tensions wise. Nucor is North America's largest recycler, so that's what we're talking about here, steel recycling. So yeah, I guess this might be maybe part of the reason for the questionable guidance for Q4. Steel mills segment dropped in Q3 compared to Q2, lower volumes and margin compression. Higher average cost per ton on steel pricing. So basically steel is costing more. And as far as financial situation, they have this credit line that they're still able to get. And then they have a solid upgrade from Moody's. I'm not a public credit investor or anything crazy like that. I mean, the 2008 sort of made you question all these credit rating agencies. But all we have to do basically is know, yes, they expect Q4 earnings to be lower than Q3. We can see on the chart the reaction to Q3 earnings was good despite that guidance. And then Q4 earnings are going to be in late January. So that's a long time. If this thing just starts to chop, and specifically if it chops below 150 and you just get a bunch of this, like, you probably just sell out of it for a little loss, or you just don't get in it at all. But if it does hold this level, it's important because the gift is, the curse is the gift. Because if you go back August and then September and then before that, August of the year before, once it gets above that level, it can make big moves. I mean, this doesn't look like a lot. This is 30% in, I don't know, a couple months. I mean, granted, the whole market was pretty, pretty active during that sort of post-tariff time. But yeah, a couple months, definitely got 20% at least into its earnings. So yeah, it's an idea. Following on that, a nuclear company sort of test in the long run is definitely going to be important if you just buy this blindly, which I don't recommend. But United States Steel X is another one, and then Reliance Steel, maybe you've heard of that one. Try to keep generally to the companies I've heard. That's not doing anything too interesting. And then X, I have taken a look at this one. This one has been on the radar. I don't know exactly why. I mean, this is pretty gappy, 2023. I don't know. I mean, this price action is just so difficult. I mean, you can't sit in a stock for a month. So to be perfectly frank with you, the opportunity here is pretty much where it's at, which is why I'm talking about it today. 150 is interesting. If it can get above there and hold, maybe you get a push for a week or two up to 160 or 170. If you don't get that, you probably want to move your money elsewhere. But there's definitely skyrocket potential. So if you like these ideas, hit that like button. If you want to see more, hit that subscribe. If you want to see the best idea of the day, head over to stockscommunity.com and I will see you in the Discord. Not financial advice, but I hope to help.
This is Sam Putnam.
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 This is Sam Putnam.